Welcome to Shark Cap Table Fast, the 1-minute deal maker for sellers and buyers of equity that helps you keep your arms and legs. Today we're going to go through what happens when you receive an offer to buy some shares or investment units in typically a private deal. This tool will work for both sellers and buyers. So let's do this. Let's scroll over here a little bit and let's set up the red to say buy shares. Now I want you to notice one thing. As soon as we do that, we're actually loading a lot of data that has been previously placed into the analysis section of a unit offering. And it would be good to keep the help. So now let's scroll back. Notice this thing now says buy shares, use fast to analyze and determine fairness before purchasing private placement or a crowdfunding deal. All right. Now right in here we've got a lot of data, and I'm going to move our little flippers up, move them over to the side. And where do we get that data? Well, here's what happens. Let's scroll down here. You've been offered shares in Whizbang Corporation, a privately owned company seeking expansion capital. You need to examine the selling brochure, extract deal data, and then use Shark Cap Table Fast to analyze the deal for fairness. So here we are. This is Table 1, and we refer to it right here. Whizbang Corporation valuation factors from number 1 below. So when you enter these red numbers, you will be actually changing these numbers here. The spinners don't work here, only at this section here. So let's just go through this for a second. I see deals all the time, and typically they're a $1,000 unit price. There's 1,000 shares in a unit. That calculates out to be $1 share offering price, and the total units in the offering are 500. Now we have a number here. I'm going to come up here and just simply get rid of that so you can see what happens before you load the data. See? Now goes pink. Fast does not have an exit price. Now these get to be a little tricky. You have to dig to find how much cash they've actually invested. They'll tell you, oh, they've got $1 million or $5 million of additional value. Well, I don't believe it, so I always cut the additional value down. Read along here, and this will give you an idea what you're up against. You have to read exceptionally well to get the shares outstanding, and especially the options, warrants, and convertibles. If you don't do this one, you're going to get diluted, and you won't understand why after fact. Now here's the total shares offered for sale. That's just simply the number of shares and the number of units gives you 500,000. And the offering total is the same sort of thing. We have 500 units at $1,000 each, gives you 500,000. Now, they'll tell you, oh, my goodness, we're going to sell this thing in 2 years, and oh, we're going to get $10 million. So now let's go up and see what really has happened. As I said before, we've already got the data loaded in. Remember the 100,000, the million for 1.1, the 3 million shares outstanding. But there is something you have to do. This is the target for the option warrants and convertibles. You're never going to get exactly because of the spin button increments, but let's put it at 1,200,000. 20,000 doesn't make much difference in the scheme of things. Now, here's the important one. Right now, based upon 1.175, we have a 29-cent share cost. But we need to read this red because the offering price was $1. Remember down here, $1? Okay, let's go back. Now, you need to spin this up until you see this number here equaling $1. Now, the important thing here is that the pre-money value that these guys are pricing their shares is outrageous. Now, we're almost there. There we go, $1. Again, it's never going to be exact. Now, if you remember some earlier tutorials, professional investors rarely give you what you think you're worth. So here it's already 4 times greater. Now, the total units in the investment, they're raising 500,000, so we spin in 500. And this 10 million is from below, so let's create the 10 million here. You have the blue is going to calculate, the red is just there for a little example. And we got to make sure that we show year 2. There we go, year 2 here, 10,000 here, so forth and so on. Now let's see what kind of a deal this is. Okay, so let's go with the fully diluted shares. 22% Wiz options. The Wiz founders get 66%, and the units have 11%. Now the investment multiple based upon a $10 million sale in year 2 is 66 for the founders, 2.2 for the units as a whole. Remember, you're probably not going to buy the entire unit offering, but the metrics still work the same way. And, of course, the internal rate of return is just terrific for the Wiz founders, and, hey, it looks pretty good for the units. Wiz founders definitely have control, and the units as a whole have 14.3%. But now I ask you, what deal ever goes off on time? So let's go to year 4 and see what happened. Well, my goodness, we just halved the internal rate of return. Of course, the unit investment multiple stays the same because it's not time sensitive and nothing else changes here. These are all the same. Now, again, I ask you, have you ever seen a $10 million deal actually happen? Well, what's going to happen is you're probably going to, at best, get $6 million for this thing. Whoa, Nelly, what happened? Well, the units now get 1.3 times their money and a 7.3% internal rate of return. Yeah. So what has happened here by virtue or by negative virtue of this pre-money being so high, any reduction in the future value is going to substantially alter your internal rates of return and your multiples. So what have we learned? Let's go back and set this thing up as a $10 million sale. I'm going to show you one more interesting thing here, and a 2-year sale. Now let's come down here. Remember, this is what we think the company is worth. So if that's what we think it's worth, and we're on the buy side, why the heck would we even be giving them $4 million pre-money valuation? Well, remember, we're just like the sharks. Now we want to beat them down, just like the sharks would do to us. You know? So let's be nice and give these guys $1 million versus $1.1 million. Okay, now what have we got here? Now we got 6.7 times their investment multiple. We got a hell of a internal rate of return. And now we own 33% of the company. And we got 40% of the voting. Now let's do one more thing. Let's see what would happen on the worst case. It takes year 4 to sell this thing, and we only get, going the wrong direction, we only get 6 million. Well, let's see what we got now. We got a 4 multiple, 41% internal rate of return. We still have the same voting. Hey, what do we learn here, folks? The whole point is these guys that call you on the telephone or send you some deal in the mail have way overpriced. In fact, they've taken all the potential juice because they start with a pre-money value that's way out of line with what it really is worth. Now let's go down here and ask ourselves a couple of questions. Are you really going to see this exit value? And what about the risks ahead? Well, you know, 10 million isn't going to happen. Haven't the founders and the option holders sucked too much out of the deal for hardly any cash? Well, yeah. Earlier, they seem to have it all. Isn't the pre-money value that drives share pricing way out of line with founders' valuation? You betcha. 4 to 1. Aren't you paying too much for too little? Sure. Is there any juice left in the deal for you? Not much. So, Shark Cap Table Fast, if you use it as a buy-side tool, is going to save you a lot of heartache and a lot of money. So please, please, before you spend money on any investment deal, utilize this tool. It's going to more than pay for itself. Thank you very much.